John, talk about your money. I'm sure you've heard stocks have been rattled recently because of the uncertainty over tariffs, but you've heard before probably when stocks or prices are low, that's the time to buy or maybe even increase your contributions to your 401ks or IRAs. But what should you know before you do that? Marshall Clay with the Welsh Group joins us now to hopefully provide some insight. Good to see you this morning.
Yeah, good to see you.
Yeah, a lot of people are saying, this is what Warren Buffett used to say. You buy low, right?
Yeah, that's right. And I think, this is a pretty uncertain environment right now. I mean, there's a lot of, sentiment and narrative around these tariff policies and how they're going to affect things. But I always like to remind folks that, in the short run, the market's going to respond on a lot of emotion, a lot of narrative. And right now, the market is hating all of this uncertainty, right? And so the key is, and we've talked about this at our firm, that the longer this sort of tariff negotiation goes on, the greater the risk. And so I think the administration's likely going to try to speed this up. So I wouldn't necessarily obsess over what's happening right here, right now, because things could change very quickly.
So if you're a short term, you're young, you're a little bit older, you're close to retirement, what should be your strategy?
Yeah, I think the first thing I would tell folks, and this is hard to do, right, because we're all citizens, but I would say set your political leanings aside. I've gotten a lot of calls from folks that want to make investment decisions based on the fact that they either like or dislike the president, and this goes for both parties. So try to set that aside. And as investors, our job, and particularly my job as a legal fiduciary, is to make sure that I make money throughout all environments, right? So set your politics aside, be patient, and really avoid that binary choice. I've had a lot of people saying, well, I'm just going to pull all my money out of the market and I'll put it back in when I feel better about things. That is a recipe for disaster. But I would say that if you're a retiree, if you're close to retirement, I do think there's probably going to be some more uncertainty here in the short run. So if you're someone who's vulnerable to those emotional decisions, you need to make sure you at least have probably 3 years of your cash flow need in retirement in really safe cash equivalents, short-term bonds, things like that, things that aren't going to be very volatile through this. Ideally, you want to have a little bit longer time horizon or time frame on that safe money, maybe around 10 years. But if you're a younger investor, you really need to embrace this opportunity, right? When you see a lot of commotion in the stock market, a lot of times it's based on a lot of emotion and sentiment. So sentiment is not what's going to rule the day longer term. The fundamentals and the abilities of our companies and the global companies' abilities to make money is what's going to matter longer term. So if you're a younger investor, I would be looking to dollar cost average in. If you're sitting on a pile of cash, wait for some better opportunities.
And to your point, for instance, just throwing a company out there like Nike, Nike's not going out of business anytime soon. So you want to get companies that you know about. But I think their stock price is half of what it was in terms of the 52-week low.
Yeah, and I think that's why it's important to understand what it is that you own. I mean, there are certain companies like Nike that are more vulnerable to the outcome of this environment, right? So if you're allocating your capital, I wouldn't say necessarily that, hey, Nike stock has taken a big, downturn, I should be piling in. I'm not saying that you shouldn't buy it at all, but I'm just saying that there are certain companies out there that are going to be more vulnerable potentially in the new world. So understanding what you own, how they make their money, and how they're vulnerable geopolitically is very important.
A lot of good things to keep in mind. All right, thank you very much, Marshall Clay. We do appreciate it. JJ is going to be coming up next.